Hello, hello. So, we are here to talk to you about a great portfolio. So, really, what we've noticed is that a lot of people want to know exactly what we're doing with our own money. We're not financial advisors. We're never going to tell you what you should or shouldn't do with your own money. But all we can do is tell you exactly what we're doing and how it is that we're going to be managing our finances over this next kind of the end of this bear market and into the bull market, because now is when you need to put together the portfolio in order to let it run during that bull market. So that's exactly what we're going to be doing. And AJ, you're going to be playing a very big part in that, aren't you?
Yes. Yeah, we've got some great, content coming out for you. This portfolio is going to be a series, we're going to be walking through showing you everything we are doing with portfolios we have made, to bring to you. We are going to be starting off with a $500 account, just because, that's it's affordable for the most
Mm.
for the most people. And we also are going to have a $5,000 account as well, just to sort of show you that when you do get up to sort of trading with thousands of dollars, you do tend to see you do see a lot more returns. But we also want to have that $500 account to show you that you can start off with minimal amounts of money and work your way up to that $1,000 account, and then onwards. So that's what we're going to be bringing to you.
Absolutely. So make sure you stay tuned. And also, if you do
Yeah.
want to follow us on this journey, I would highly recommend it, to be honest. I'm going to be doing this with a couple different, of my own accounts. We obviously we want to bring this to you, but we're not going to bring you anything that we don't like. And that we don't do ourselves. So that's
Yeah.
exactly what. And if you want to get $500, deposit it into an account, you can get up to $4,500 for free as a bonus if you use the two links down below. So either Bybit or Femex, those are our two partners. So make sure you follow those links if you want to join in as well. And like I said, we'll do it with those two accounts. But without further ado here, AJ, I like what you've just tagged there from Mutant Rex.
Yeah.
You're not wrong. You're
I've,
not wrong, mate.
yeah, you're
I
not
feel
wrong.
like the
That's what
beginning of crypto right now.
yeah, that's what we're doing at the moment, aren't we? Crying.
Exactly. Yeah, it's
No,
uh,
that's
it's
good.
it's not great, is it? But anyway,
No, it's not.
let's jump in.
Yeah. So let's start off with a chart. Now we are very, very, very close to that $20,000 level, and we are very, very close to that 2017 all-time high, which sat. I think it wasn't 20,000. I think it was just under 20,000 at approximately $19,800, basically $20,000. But we are very, very close to that level now. Now, in the daily streams, I have been telling you previously that I wanted to start dollar cost averaging at 24,000. Now, I haven't started dollar cost averaging at 24,000 because we did smash through that. $22,300 was my next level to start dollar cost averaging in, but because we smashed through that, I haven't yet done that now. So I think right now is the best time to be dollar cost averaging into Bitcoin. There is lots of on-chain data that is telling us that we are very, very close to a bottom. And I showed you this previously in previous videos. So yesterday's video, I went through some on-chain stuff there, and that on-chain analysis was telling us that a bottom, is in this vicinity, but there is still a little bit more room for downside. And if you missed that, make sure you go back and watch that, because there's very, very helpful information in that video to sort of give you an understanding of how far down the price is going to go. I'm going to give you a little run through of that today. I'm not going to go into too much detail though, but basically, what we are looking at now is we are looking at this 200 MA. The price is below this blue line here. And this 200 MA has been, perfect support in previous bear markets. So if we are looking at, so this 200 MA, it has to have 200 weeks of candles for it to be formed. So this was formed on the 12th of May 2014. So that's where we can take the data from. We can only take the data from that date. Now, the 2013 bear market, well, the 2015 bear market, sorry. It's 2013 was the peak. We had that 2014, 2015 bear market. This was when we first established finding support along this 200 MA. And you can see that we bounced off it quite nicely around 3 times. We did do that again in the 2018 bear market as well, 2018, 2019 bear market, when we peaked in end of 2017, start of 2018. We found perfect support along that level as well. And then we know the March crash 2020 due to COVID, we also found really nice support there. So as of right now, this is showing to me that we are in a very, very good area to be buying. Now, I don't just want to buy at $22,300 because there is a chance that we can go lower. Now, I don't expect us to get a candle break below this 200 MA, this blue line here, but I do expect wicks below this level. Now, previously, we've seen pretty big wicks below this level. This wick here was around a 28% wick to the downside. So, what we want to be doing is capitalizing on that wick, and we want to dollar cost average as that wick comes down. So, as I said, we still got 4 days, 15 hours left of this weekly candle. I don't expect the price to drop to get a break below this 200 MA. If it does, then I think there's going to be a lot more room for
some heavy. Yeah, it could be a bit of downside, and I guess the key point to identifying these key areas here, AJ, isn't it? Is like once we see these, this give us a good indication of where the bottom might be. Now, once we have an idea of where that bottom might be, that's the case where we then look, okay, well, what type of portfolio do we want? So the number one rule, and I just want to quickly give these guys a bit of a recap on some of the overall rules before we kind of get a little bit too far into the technicals, is it's very much looking at when you're building a portfolio, especially at this stage, we're staying away from altcoins. AJ's been a number one guy to kind of actually reiterate this all the time, that most of our portfolios are in Bitcoin because it's kind of seen as the most stable, and we see that everything that's happening in DeFi, Celsius, 3 Arrows, for example, staked ETH, all of this mess is really having quite a bad effect. Now, Bitcoin's doing relatively well. So when we're building a portfolio, we're looking to have quite a lot of it in Bitcoin and these less risky assets. So let's talk a little bit, AJ, about how, the first thing that we would do is identify the right coins. And how do we identify those right coins?
Well, if we take a look at this thing on the screen right now, we want the safest coins as possible. And we know that as, Bitcoin and Ethereum, those are the two biggest cryptos out there, and they are the safest, they are sort of classed as the safe assets in crypto. Bitcoin, is classed as the sort of the safest asset, but Ethereum as well, personally. So what we want to do, is start off with a portfolio that is just 100% Bitcoin, Ethereum, and USDT. We want to have a little bit of cash just so that if the price goes lower than we expect it to, then we just have a little bit more cash so that we can sort of dollar cost average that average position down even further. So starting off, we are going to start off with just 100% portfolio in Bitcoin, Ethereum, and USDT. And this is going to be the same case for the $500 account. And if I just change it here, the $5,000 account as well. Now, this is not something that we are going to be in for a while. We don't want to stay within this 100% safe portfolio for the whole time that we are trying to build this portfolio up, because we want to make as much gains as we can. And to do that, what we are going to do is, as we're sort of confident that Bitcoin has found that bottom and is going to start making its way back up to the 30k, the 40k, then the 50, then all-time highs, then we want to start looking at sort of shifting our portfolio from 100% in our safe hodl portfolio to a more risky portfolio. Now, we only do this when we start to see profits in Bitcoin and Ethereum, because we don't really want to risk the initial money that we are putting into the account. We want to risk the profits. So what we're doing is we are waiting for those profits, waiting for that confirmation that Bitcoin has got a bottom, and then we are moving towards we're going to move towards a medium risk portfolio. And for me, as of right now, sort of, and this is what I did the last bear market, well, the bear market for me, which was the 2020 COVID dump. And this is, you know, exactly what I did. I moved my portfolio from a safe hodl portfolio as the price started to increase into a medium risk portfolio. And that medium risk portfolio for me was 50% in safe hodl, 35% in medium risk tokens, you know, such as Solana, AVAX, DOT, RV, BNB, Link, ADA. Now, just ignore these, you know, medium risk and high risk tokens for now. They may differ as, you know, as time goes on, but for now, I'm just using this as an example. But medium risk for me, I went in 35%, and then high risk, I only went in 15%. Now, this is just, you know, this is just medium risk. I'm not risking too much. I've still got 50% of my hodl portfolio there. All I'm doing, you know, is I'm risking the profits that I made from my safe hodl portfolio. But then we want to, you know, sort of make even more gains as the price goes on, because what me and Ben have realized is that towards the end of a bull run is sort of when the alt season really explodes. So, you know, towards the end of that bull run, that's when we want to get into a more risky portfolio, and that's where we go into sort of a high risk portfolio. Now, these percentages may change slightly depending on sort of the market conditions, you know, when we get to this stage. But as of right now, and what I did previously, you know, I still have 40%, which is pretty large sum in my safe hodl portfolio, 30% in medium risk, and then I doubled that high risk portfolio and went in 30%. And sort of this high risk portfolio is where we start to see the big gains. Now, you can change this a little bit. You know, you can move your safe hodl portfolio maybe to 30% and increase that medium risk and high risk. But it, you know, it all depends on sort of what the market conditions are doing and how sort of the Bitcoin dominance is doing. So this is sort of what we are going to be working towards. We want to be working towards that high risk portfolio. Before that will be the medium risk portfolio. But as of right now, we want to just stay safe. We want to be in just 100% in that safe hodl portfolio, Bitcoin, Ethereum, and then, as I said, USDT, just so that if we do go below that that initial price target we have, then we do still have some cash to sort of you know, dollar cost average that price down even further. Now, just want to show you here, we do have this is what we're going to be showing you. These are the accounts we're going to be showing you. We have that $500 account over on Bybit, and we also have the $5,000 account here over on Femex. And like Ben said, you know, I think there's a $4,500 signing up bonus when you deposit some funds into the account. So make sure you click those links below. And you can also, you know, follow along with us on our journey to sort of build these portfolios up. Now, we've got this $500 portfolio, as I said, just to show you that we can start off with minimal amounts of money and, you know, trade it up into a bigger account. And this is what we want to be showing you. This is what we want to be doing with you. Now, what we are going to be looking at now is sort of the entry point that we are looking at. So just firstly, I do have, like I showed in yesterday's stream, if you didn't watch that, make sure you watch it. I do have my sort of low target at $15,000. The reason why I have my low target at $15,000 is because I have some on-chain analysis that's telling me that, and I have a price target on the Bitcoin chart that's telling me that. Just to quickly show you that, we do have this head and shoulders pattern here, and this is giving us a price target. If we take the breakout from the breakout point, from the neckline to the top of the head and take it to the approximate breakout point, that gives us a target of around $15,000. So that's the first, you know, target for me, that $15,000 is my target. So that's where my last dollar cost averaging in, you know, well, my last sort of limit order is going to be. And then obviously if it does go lower than that, then we do have that extra USDT just to sort of, you know, as I said, dollar cost average that down. And we also have this on-chain thing here, this Bitcoin price model. I went through it a bit more in depth in yesterday's stream. So if you missed that, make sure you watch it. But just to run through quickly, the CVDD, which is this pink line here, previously has signaled every single bottom for Bitcoin's bottom for the bear market, since 2011. So 2011, you can see that we found perfect support at this pink line, the CVDD, and we bounced off that perfectly, and that was the low. Back again in 2015, when we found that bottom, perfectly found the bottom on the CVVD again, and back in 2018, perfectly found a bottom on that pink line, and we came very close to it during the March 2020 crash. But I wouldn't consider that as a bear market. I'll just consider that as a COVID crash because of what happened. So it's understandable that we didn't come all the way down, but because we are in a very, very clear bear market as of right now, I am looking at the price coming down to $15,000. To be precise, $15,359. That can vary a little bit as the weeks go on, but as of right now, it sort of sits around $15,000. So that is what I'm expecting the sort of low to be for Bitcoin. So I am going to have a limit order at that point, but we want to sort of spread these limit orders out, sort of equally between this level that we are at right now and $15,000. So that's exactly what we are going to be going on to now. We are going to be going on to showing you where we are putting these buy orders in. I will then quickly go on to Ethereum as well. If I just pull up the charts as well, we're going to be doing the exact same for Ethereum. I was going to start dollar cost averaging in at $1,400, but we have smashed through that. So, it's sort of better for us to start dollar cost averaging in now, very low. I did post a tweet over on Twitter today saying that if Ethereum breaks that $1,000 level, there is going to be over 400 million liquidations, long liquidations. So I think, once we do break below that $1,000 level, there's going to be a pretty significant crash all the way down to potentially $800. That is my target for Ethereum. So, we're going to be dollar cost averaging into Ethereum as well, all the way down to $800, and then obviously have that USDT just in case we break below that $800 level, and we can continue to dollar cost average down. So what we want to do is we want to open up Bitcoin USDT on Bybit. Now this is the $500 account, and just make sure we've got it all right. Yes, we do. So the first price that I want to get into for Bitcoin, if I just get the chart up to show you the first. So we want to split it sort of equally. So I think, we're going to start from the bottom. 15,300, what was the exact price? 15,350, let's call it, is going to be the first sort of entry point. Now, we are going to split this $500 up. We're going to put $166 into Bitcoin, $166 in Ethereum, and then have the other $166 left, just in case we go a little bit below. So we want to split this, starting off with this $500. The $500 portfolio. We want to split this this Bitcoin $166 up, between this level here. So first of all, we are going to put in. Let me just work out quickly how many we're going to put. So I think we're going to split it in maybe 6 or 7. I think we'll go 7. We'll put 7 entries in, and we will put our first one in. So let me just get my calculator out so I'm just make sure I'm doing this all right. So we're going to put our first entry in, and that's going to be $23.70 at no, I've done that wrong, haven't I? $23.70 at the $15,350 level. So that's going to be our first buy order. So we're going to put that in now. Why is this not working? How can we change this here? So I might have to do it this way. So we'll just have to scroll like this.
Yeah,
So
it
let me
kind of
just
all works
put
out the
that
same.
in. Yeah, just make sure I get close to that 23 as possible. So there we go. So we put that first order in there. Then we're going to look at, so, if the price, let me just move this
Just
down.
a quick recap there, guys. For anyone who's not familiar with a limit order, if it is, if you are
Yeah,
relatively, should we say, early in terms of trading, I don't imagine you are because it's a bear market and nobody, it's very rare for people to come and discover crypto in a bear market. But
yeah,
if it is that you are, this is a limit order, which basically means that yes, the order is there, but it's only going to be triggered once the price gets to your desired level. So, on the bottom, you see the order value. That's how many dollars you're happy to put into this trade. The order price is, okay, at what price do you want this trade to go ahead? And it will tell you the price. So, if it's at 20K, it tells you the amount of Bitcoin you're going to be buying.
yeah, exactly. So what you can see me doing right now is just putting in some of these limit orders for our entries and just getting it as close as $23 as possible. For some reason, it won't let me type in the number, but I will. So we've gone 15,350 as our first entry because that's the initial bottom that I think Bitcoin is going to come down to. 16,000, 17,000, then we'll go 18,000, just spreading it out, So because I do have that target of $15,000, I am expecting the price to come down to that. I know a lot of people don't even expect the price to come down to 20K. A lot of people over on Twitter are saying, 20K is not going to be hit, but we are $200 as of right now off 20K. So I think, once we get to that 20K level, there is lots of support here. There is a potential we could hold this level. But for me, I think, there is going to be a little bit more downside for Bitcoin. And I think $15,000 for me is that perfect bottom. So I am just going to continue putting in some of
And
these.
another thing, while you do that, AJ, one of the reasons why
Yeah.
we discussed it, we wanted to do this prior to what's happening later on today. So today,
Yes.
obviously, it's a Wednesday, and what we're seeing is the U.S. Fed. This is the day that they are going to increase the interest rates. So the interest rates, they obviously they talk about it, and that has a massive effect on the market. But today is the day that they actually do it. Now, the expectation has always been that they'll do a 50 basis point hike. And so the market kind of, the market fell because they were like, all right, okay, well, that's going to mean a smaller economy, less money for companies. So therefore, less profits. And then therefore, if they have less profits, then that's going to obviously be very bad for the stock market because they're going to miss their earnings, etc. So stocks are going to fall, and this is why everybody came out of those risk-on assets. The S&P, you see the Nasdaq, all of them kind of falling. Now, it was only on Friday that everybody got super concerned because inflation came above what was expected. Now, as a result of that, the market kind of thought, well, do you know what? The Fed doesn't really know how to handle inflation at all. It's just messed up completely. So that's why now there's a bit of an expectation that the Fed today are going to drop a bomb on us. And instead of the 50 basis points that's expected, we might have a 75 basis point hike, which obviously is more than expected. I will say since the beginning of this week, the market has kind of priced in a 75 basis point hike, but people are not really sure. So we're only going to know once the Fed do that, and that's going to happen later on. I believe it's 8 p.m. or 7 p.m. In the UK, which is 2:30 in New York Eastern time. I believe that's the timing. So either way, there's going to be lots of volatility, but obviously, if it does come in at 75, we want to make sure we have some of these orders ready just in case. And if they don't get filled, that's absolutely fine. We can just
Yeah.
allocate that money somewhere else.
Yeah, so just to add on to that, Ben, if these orders do not get filled, I am expecting the price to come down to around $15,350. But if they do not get filled, then we can change our strategy. And the strategy that we're doing now is dollar cost averaging, and the strategy that we will change it to is sort of we will trade on the way up. We will trade the breakouts of those resistance levels. So this is always my first way to start trading, dollar cost averaging in. If some of my, limit orders aren't hit, maybe the last two aren't hit, then I will take that money out of the trade and then use that to open trades when we do get the breakouts to the upside.
Yeah, very nice. The thing is, I think
No,
kind of on the way up, you have like support and resistance zones that you already know, which can makes it, to be honest, a bit easier. Whereas, on the way down, you don't, there are some support and resistance zones, but we keep breaking through them. So it's quite hard to trade on the way down, much, much easier on the way up because you've already got those solid zones that we've had, that we've already dealt with.
Yeah, you establish those on the way. You establish those resistance levels on the charts as well, and they're also great things to break out of, to trade off. Sorry, and that's what I'm going to be doing when we sort of found a period of consolidation. I'm also going to put in some. I'm going to start going live and showing you some of the live trades that I'm taking personally as well. And mainly, we will be trading breakouts of resistance or sort of levels of support.
Yeah.
So here we go. I have put in all the orders as of right now. You can see starting off with the $500 account, we've got the $15,350. Then we've got 16, 17, 18, 19, and then 20,000. I've done the exact same thing for the $5,000 account. So now we are just going to wait and wait for these orders to be filled. Now we're also going to do this for Ethereum. Ethereum, I'm going to take a little bit different approach to it. I'm going to put I'm going to put fewer entry points into Ethereum because we are so close to that sort of $800 level, which I'm expecting as of right now, and we do have that cash reserve as well. Just so if we do break below that $800 level, we can obviously dollar cost down. So if I just enter into the Ethereum, no, I don't want to transfer. I want to trade. Here we go. So again, starting off with the $500 account. I want to take a look at Ethereum. So Ethereum, as of right now, is looking like it's breaking through this. We've still got 4 days, 14 hours left, but it looks like we're going to break through this, previous support level. Before that, it was used as resistance. But as of right now, we are, seeing a pretty big break below that. $800 is my target. We've got this resistance level here. I'm expecting the price to come to this level here. And for Ethereum, I think 800 is sort of the bottom for me. 700 is still a possibility, I think. So that's why we've sort of got that extra little bit of USDT to sort of capitalize on that if the price does come down there. So I'm going to start the dollar cost averaging in at around $1,000. Then I'll put one at $900 and then one at $800. That's sort of strategy I'm going to take for Ethereum. So if I just change this, put all the borders in now. It is taking a while. I'm sorry.
Yeah, sorry. You guys, obviously, like we said, feel free to follow us, along this strategy, in the journey. Yeah. And obviously, each day we'll be coming back and giving you quick updates on exactly what's happening in the portfolio, and what different trades we might be taking depending on whatever's happening, from both a fundamental and also a technical basis. So we'll make sure that we tie this in with our daily videos that we bring you every single day.
Yeah, exactly. Yeah. And some of these, when I'm trading as well, if I'm trading, say, on a 15-minute, I may do longer streams just so that I'm there, with you, showing you everything I'm doing. So you sort of just got to stick with us and trust.
Yeah, drop a like on the video as well. If you do want to have like a specific like, should we say, trading room? So we can do like a trading room with AJ where we look through at some of the data that's going on, and then also look at the technicals, the charts, and find out exactly how to identify the patterns that lead to those big breakout trades. Because you're never going to win every trade, but it's identifying through those solid patterns, what those trades might be. So If you do want to have that, make sure you drop either a comment or a like on the video itself, and then we'll be able to, to kind of set those up. And if it is that we just want to jump on and do some scalping, you guys can jump on as well, and we can make sure that we all try and make some money together.
Yes, yeah, exactly. So as you can see, I put all the orders in the 3 orders in for Ethereum on the $500 account. Now I'm going on to Femex and I'll put those orders in now. And, like I said, I think a little bit earlier, I am expecting to see Ethereum, if we do break below, sub $1,000, I'm expecting to see a pretty hard hit for Ethereum because, over $400 million is going to be liquidated sub $1,000. So I'm expecting that to happen. Hopefully,
crazy.
Yeah.
Well, hopefully what we can do. Sorry, yeah. Sorry, I was going to say, hopefully, we don't see that in terms of the Ethereum trade, because 850 is the kind of the last level of support. I say the last level. There's not. It's pretty bleak if you're breaking past 850 on Ethereum. It sends a very wide message across the whole of the crypto market to have something that was trading at like 5K drop down to less than $850. That's pretty awful, to be fair. It reminds you of 2017, 90% drop.
Yeah. Yeah, there is something I actually want to show in the chart. So all these.
Yeah. Well, let's do some of these orders on Femex a little bit later. We can come back.
I've got all the orders in now. All the orders are in now, so that's good. Everything's in now. Yeah, there is just one thing I wanted to show you over on the Bitcoin chart that I haven't actually mentioned previously. So looking at the 2015 bear market from the all-time high, which was around $1,250, we saw a massive pullback of almost 87%. Okay, we saw a similar thing from the 2018 bear market. So if we drag that from the all-time high to around the bottom area, that was a 84% pullback. And then if we go to today and we see how far, I think it's around, as of right now, is around 60%. As of right now, 70%. Okay, we're at 70% right now. So previously we had dipped another 10-15%. So there is a possibility that the price can drop even below $15,000, and that's why we do have sort of that little bit of cash reserve as well, just in case that happens, because previously that has happened before. So what says it couldn't happen again? But as I said, the bottom for me at the moment is $15,350 approximately. So I don't expect us to break below that. If we do, then we do have that cash reserve to sort of help us out there and sort of average that price down again. But yeah, just to show you here, 80% move to the downside, that is something that is a potential possibility. So we do have to be aware of that as well. But all the orders are in on Bybit and Femex. So all we've got to do now is sort of sit and wait for all of these orders to get filled. And just to recap again, we are starting off with this safe hodl portfolio. 100% of the portfolio is going to be in Bitcoin, Ethereum, and USDT, just because we are waiting for that bottom. What we're doing by dollar cost averaging is we're trying to get as close as the bottom as physically possible, because we can't, we can't actually predict a bottom. It's almost impossible. Well, it is impossible to predict the bottom. So by dollar cost averaging in, we're getting as close to the bottom as sort of physically possible. So that's why we are dollar cost averaging all into just safe hodl portfolio. So that because if we take a look at the dominance quick, you can see that the dominance is increasing. I know we're having a bit of a pullback as of right now, but the dominance went all the way up to around 48%. I told you a while back that I was putting around 70-75% of my portfolio into Bitcoin when we did break to the upside out of this falling wedge. And as of right now, it has been playing off. We are seeing this pullback as of right now. I am expecting a rejection from this point, and that's when I sort of expect the alts to do a little bit better than Bitcoin, and we are seeing that slightly as of right now. We're not seeing the alts crash as much as they were previously, but depending on what happens today, with all the news, and Ben's going to update you on that. We could see a lot more price action towards the downside. Hopefully filling those buy orders that we have. But yeah, just to go over again quickly, we've got the safe hodl portfolio. All of those buy orders are in as of right now. Then we want to sort of, when Bitcoin finds that bottom, we want to then, see our safe hodl portfolio and make some nice profits. Once we see some, nice profits, then we can start moving in, and we get that confirmation that Bitcoin has had the bottom, and we are going to start seeing some more upside. Then we can start thinking about moving into that medium risk portfolio, where we put around 35% into sort of medium risk tokens, for example, Solana, AVAX, DOT, RV, BNB, Link, and Cardano. And then we have some in higher risk tokens, so 15% in high risk tokens. That could be Phantom, Rose, Near, Data, or Shiba. This is just to give you an example. They may change as sort of time goes on, but as of right now, that's just an example. And then we want to, eventually towards the end of the bull market, we want to be in a higher risk portfolio. Now, these percentages may change, as I said before, just depending on what the current market conditions are at that time. But we want to sort of put our profits into more risky assets, so medium risk and high risk. We doubled the high risk here, because what we tend to see is towards the end of a bull market, we do tend to see that is when the alts have their massive alt season. So we want to capitalize on that, and we want to make the most gains as possible. So basically, follow us through this portfolio strategy that we have here for you, and we are going to go through this with you. And if you follow us, we are going to be showing you how we are going from the safe hodl portfolio to the medium risk portfolio to the high risk portfolio. So stay with us on that, and yeah, you can follow us on the journey. And as you say, we are going to be showing you everything we are doing on these two trading accounts here, the $500 and the $5,000. We're not going to do anything without showing you first. So make sure you follow us along with this bear market portfolio strategy.
Absolutely, and then hopefully it just changes into a bull market strategy. That is the overall idea. Yeah, at the moment we have to play it safe, and then we'll just be moving on further onto those that high risk portfolio. But that will come later, and I'm sure the coins will change as well. And we might even take some suggestions from you guys as to which coins you might want to trade. But obviously, we're happy to go and do the due diligence, have a look, do the fundamental, maybe some of the technical analysis as well, and then come back and say, this is actually a good trading opportunity between these levels. So we can include those as well. But obviously, you have to comment in the on the video in order for us to do that and kind of look into those for the next one. But yeah, just like you said, AJ, we're keeping it very safe for now. Yeah. So there you go, guys. Obviously, if you do want to follow this, which we highly recommend that you do, use the two links down below. So one for Bybit, one for Femex, whichever it is that you decide is best for you in your specific country situation. Like we said, there is up to $4,500 as a bonus when you sign up with both of those. So we look forward to seeing you in the journey.
Yeah, thank you very much for watching. I hope you enjoyed, and I hope you follow along with us.
Take care, guys. See you in the next one.